Back with closing trades right here in ET Now. Well, we've of course covered a lot of lost ground, but unfortunately the US futures are indicating once again a weak start. It's over a 200-point dip for the Dow futures. S&P down over half a percent or so, and 160 points of a knockoff coming in for the Nasdaq futures as well, which is down about almost 0.7%. Very quickly on to European markets, because there as well the negative bias is quite evident. About a half a percent downtick is what you can see for the CAC. And remember the steel and aluminum duty hike or tariff implementation that Trump has talked about come June 4th, that tends to impact EU most, in fact, as a regional play. But that said, our market's definitely a lot more resilient. We've covered lost ground and we are now down only 74 odd points or so for the Nifty, and the breadth of the market is already in the green, at least within the F&O pool. Aditya Agarwal also joins in on the show. Aditya, hi, afternoon. What is it that you're making of the market right now? Pretty ranged all through last week, and today you've seen quite a bit of recovery actually play out from the session lows.
Hi, good afternoon, Aisha. Thanks for having the show. It's more of a consolidation, I would say, both on the Nifty and the Bank Nifty, if you see. I should not be away from the Indian VIX. If you take a look at the VIX, that is something which continues to oscillate between 19 and 16. 19 being the upper end of the zone and 16 being the lower end of the zone. Aisha, my sense is till the time VIX actually either corrects below the level of 16, then you would see a sustained rally up move in the market. Or if VIX has to cross that threshold level of 19, then maybe we'll be in for some kind of a volatile market and more corrective phase, I would say, you will see in the markets kicking in. Till the time VIX continues to oscillate between 16 and 19, I think our markets will also be locked in a range. 24,500, 24,400 on the downside. On the Nifty continues to act as a key support area. On the upside, you can have continuous selling pressure in and around 24,900, 25,000. So my sense is your benchmark index will continue to oscillate in this zone. As far as Bank Nifty is concerned, that continues to outperform the benchmark index. Thanks to the PSU banks, which have been leading the rally, and my sense is that is likely to continue. Some of the large cap banks which need to chip in, and unfortunately they're not participating, are the larger ones, the HDFCs and the Axis Bank and the ICICI banks of the world. Once they start participating, then my sense is Bank Nifty could be the one which can scale past levels of 56,000, which has been acting as a stiff hurdle, and you can test levels of 58,000. There is no panic in the market as such, but it's more of a consolidation, and my sense is this consolidation is likely to continue this week also.
Aditya, point taken. Deepak, want to get a sense on the FII moves that we've seen over the course of last week and the month of May gone by. We've seen FII buying to the tune of, let's say, 11,700 crore, but that is much lesser than what DIIs have bought in the month gone by. Given that markets have been sluggish, help us understand why we've not seen more FII activity. Is there some pessimism that's being reflected on the back of this, or what are you making of these moves?
So it's interesting you say that, actually, because if you look at the NSDL data, which is actually the real one, because they have the primary plus secondary data in place, it's about 19,000 crores in equity and about 11,000 crores in debt. I think that's the total number for May so far. Nearly 20,000 crores in equity is the highest since, I think, September last year. So this is the single largest equity month for FPIs buying into India in the last 6 months. Or last 8 months actually. And then you've got the dollar, which has recovered, gone to 87 rupees. The rupee has recovered back to the 85 levels. So the relative depreciation is low. I think there are a few factors right now that are playing through. One is tariffs, one is the impact of all these geopolitical things that are happening. And in May was when the geopolitical activity happened specifically to India. So, the war that happened would have spooked at least some of the foreign investors, saying we've got to hold on until things become more stable. I believe that as Indian markets continue to recover, they will come back simply because we're doing well. And once we're showing that our markets are doing well, I think the money will come back in as well. There used to be a very large force in daily activity, in monthly activity, and so on. Now they've become less large in terms of the size compared to even domestic fund direct buys by retail investors and through their mutual fund investments. So in that sense, I think they're less important than they used to be. But I think they will come because India is a very reasonable place to invest for the long term. Once you see some layers of certainty in the world in general, I think the money will start to flow back and flow back meaningfully as well.
So, Deepak, before we let you go, any fresh ideas you're working with, putting fresh money to work at all at these levels?
So we're almost fully invested, Asha. I think the problem is, if you've got to buy something more, you've got to sell something, and we don't want to sell something. But by and large, we've reduced the focus a little bit on IT and increased the focus a little more on domestic defense, domestic manufacturing, simply because I think the geopolitical situation entails that India manufacture its own defense equipment even more. So companies in this space should do well. However, they are also richly valued, so you've got to balance that out with some kind of realism in terms of how long it will take for them to be able to grow to meaningful, much lower price to earnings returns and still give us a reasonable return on our investment. But by and large, I feel that the market in general has become more investable in the fall, and perhaps a lot of the small caps and mid caps. By the way, the small caps, even though they were up 9% last month, are still down 5% for the year. So you also had a quarter of returns, which have been fairly decent. So that way, valuations have come down a little bit, not so much. So some stocks are now available at a relatively reasonable price. So and most of them seem to be, in the spaces of domestic manufacturing, especially high level, especially high-end engineering companies. So we found that as one of the places where we could buy. But by and large, fully invested, so I don't have too much money to deploy, even if we had any fresh ideas.
Fully invested in a market like this. Deepak, appreciate you joining us and appreciate your thoughts as well. On that note, we'll let you go. Thanks so much for joining us. The time now to welcome on board Jatin Gedia, Technical Research Analyst at Mirae Asset Sharekhan. And Jatin, thanks so much for joining us on the show. Want to get a sense from you on the broader end of the market, because even though the markets overall have been quite sluggish, it's the mid-cap and the small-cap space that are continuing to be a little resilient. Are you still spotting a breakout movement on the charts for the broader end, or do you believe there's some time, it's time now for some pullback?
Good afternoon, everyone. Yeah, so post the initial knee-jerk reaction that we saw, the broader market has been pretty supportive along with the bank Nifty. That is evident from the market breadth as well, which is in the positive as of now as we speak. So we believe that yes, the index or the benchmark index is showing some weakness during the day. But however, the broader end is performing quite well in today's trading session. Overall, we believe that this is just a knee-jerk reaction. Overall, the trend for the Nifty and the broader market is still intact. We believe that this up-down movement within a range is likely to break out on the upside sooner rather than later. So we remain constructive on the index as well as the broader market, and we are utilizing dips like today to add to our existing long position. So we continue to be positive on the Nifty and the broader market. We are looking out for buying opportunities.
Okay, hold on to that thought. We'll talk about exactly that. Where is it that you're finding those buying opportunities?
Of trade left, and markets continue to be absolutely flat. We've seen some recovery from the day's low, but absolutely range bound is where we are at, both on the Nifty and the Sensex. Nifty Bank is inched back to the green, so looking good on that front. The broader markets continue to be resilient. It's names like Adani Ports, M&M, Tata Consumer, Eternal, Power Grid that are doing well. On the flip side, pressure added to the index by the names of Hero Moto, Tech Mahindra, JSW Steel, Tata Steel and HDFC Life, along with Bajaj Auto on the back of its auto sales numbers. But time now to welcome on board Nishchal Maheshwari, the market expert. He is joining us on the show. Nishchal, good afternoon. Thank you so much for joining us. I want to get your sense on the entire FMCG space, given now we have a reduction in the palm oil duty. It's a positive coming in for a lot of these FMCG players because they use palm oil as one of their core raw materials. So give me a sense on what you believe is the FMCG space headed for. Is this going to be a big positive given that we've already seen some pricing action coming in, or do you expect more of that despite this action coming in on palm oil in the quarters to come?
So yeah, I think it is positive for the FMCG space as a whole, especially for the users of the palm oil, which are all of them basically, whether it is the manufacturers of food products or guys who are using it in for soaps and all. But the important thing remains to be basically that whether the growth is coming back or not. That we have not seen as yet, basically, and I think that seems to be a bit worrying. That your volume growth is not very strong. This will definitely help them in improving their margins. But I think the market is still awaiting growth coming back in terms of volumes.
Right. Aditya, where within FMCG do you find tradable opportunities, given that when we came into trade and at that point in time when the Nifty was down about 200 points, weak breath, it was only FMCG which held out?
So Aisha, I think there are opportunities for sure within the FMCG pack, and it's far and few. Not all stocks do look good to me. Britannia is one which definitely stands out. I think offers an excellent risk to reward ratio at current levels. More of a positional trade. I don't think there is a trading opportunity here. You buy, hold it at least for a quarter or so, and I think you can see levels of 6,000 plus in Britannia. Colgate Palmolive is also looking interesting to me. The risk to reward again is favorable here. You can look for long entries in and around 2400 with a stop loss just below 2400 for a target of 2900 on the upside. The third one, I think, which also looks interesting is Hindustan Unilever. So after a bit of a consolidation, I think it's time to look at Hindustan Unilever for a target 2500 on the upside with a stop loss on the downside somewhere on 2300. So these are the top three stocks that we like within the FMCG space, and I think you can construct a portfolio around these three stocks, while rest of them are more volatile and don't have a clear trajectory on the upside.
Okay, so that's the take coming in on the entire FMCG space and what Aditya is liking from that as well. But let's talk about the EV policy, because we've had an update on that front as well. The government has outlined the EV scheme guidelines and they're targeting 4,100 crore of EV investment in the next 3 years. The criteria is 50% make in India component needs to be there by these players in order to be able to avail this investment opportunity by the government. The EV scheme, well, they're going to be investing over 4,150 crores to be precise over the next 3 years. And we also have word coming in from the heavy industry ministry, wherein they say that Tesla didn't show any interest in manufacturing in India, which means that it's not certain when, if or when Tesla could begin its manufacturing in India, and Tesla only seemed to be eyeing new showrooms in the country. The primary goal of this policy is to draw investment into EV manufacturing, R&D and charging infra as well. And the reduced imports tariff, on the back of that, the players can import EVs up to more than $35,000 at 15% tariff for 5 years. So this is one of the most important thrusts coming in of the policy. But while we are talking about the entire auto space, let's bring on board my colleague Shrishti, who's waiting by with a list and a roundup rather of the May auto sales review that we've seen. Shrishti.
Well, yes, it's kind of a mixed bag coming in from the May auto sales data. Firstly, let's talk about the passenger vehicle segment. Here, in a disappointment coming in from Tata Motors passenger vehicle sales, because the sales were not just below the expectation, and it's the second consecutive month where Tata Motors PV sales has actually disappointed. It's an 8% decline on a month-on-month basis when it comes to the May auto sales data. But herein, Maruti Suzuki numbers were actually in line to what the street was expecting, but M&M, that was the outperformer. The sales, though they were flat on a month-on-month basis, but the sales have seen a double-digit growth on a YY basis for M&M, and not just that, the management is confident that the sales momentum is expected to continue. Their EVs are doing well, and along with that, they're also bullish on the export outlook as well. Let's talk about the commercial vehicle segment. Here too, kind of a mixed bag coming in. There were not much hopes from this particular segment, but well, yes, Eicher Motors VECV as well as Ashok Leyland, they have managed to surpass the street estimates, while for Tata Motors commercial vehicle segment, yet again a disappointment coming in. But the two-wheeler was the space to be, like we have been highlighting, that this time a double-digit growth was what the street was working with, and this time around Hero MotoCorp, Bajaj Auto, TVS Motors were almost in line to what the street was penciling in, but Eicher Motors Royal Enfield, that surpassed the street estimates this time around, where we have seen the sales seeing a jump of 22% on a YOY basis. So Eicher Motors Royal Enfield sales numbers were close to 90,000 of units, and that was above what the street was working with. When it comes to the commentary coming in from the tractor majors, like we have been highlighting that that's expected to be on the positive side, because the companies are highlighting that the onset of the early monsoon actually bodes well for the sales, and they are positive on the outlook. And also the companies did perform very well in the month gone by, wherein for M&M tractors it's been a 10% jump on a YY basis, while for Escorts as well the numbers were almost in line to what the street was penciling in, but the commentary remains positive. So yes, the two-wheelers and the tractors that have surpassed the street estimates, but of course there have been some outliers within the PV as well as CV segment. Back to you.
Right, Shrishti, we'll leave it at that. In fact, let's hear out what the managements of Mahindra actually had to say about their guidance and what they're hoping to deliver, especially when it comes to growth in their SUV segment. We also spoke with Rakesh Sharma, ED at Bajaj Auto today, trying to assess the impact of the global economic scenario on the company, their export faction, and whether there is scope for more price cuts going forward. Remember, they were already undertaken price cuts of about almost 4 to 5% in Nigeria.
We've had a great May. So we built about 52,431 SUVs, which gives us a growth of about 21%, which is in line with what we put out in the analyst presentation in May, that we'll do mid to high teens growth. Our portfolio continues to have very strong traction in the market. And so we are quite optimistic with the mid to high teens growth projection we have given out on the SUV volumes. In February, we got about 30,000 bookings. And so we've been actively working to service all of those customers. At this point in time, we're very close to the 10,000 retail deliveries that we've had. And if you go back and see the April numbers, we don't have the final May numbers, and we'll get to that on EV. But our revenue market share was north of 33%, and that made us number one. So we continue to see similar traction going forward. And we have an operationalized capacity of about 5,000 vehicles per month, and we have strong bookings to back that.
A lot of moves in the Latin American continent that is really helping us. Asia is also steady. I think the cost environment is steady, though there is a headwind we are facing with the rupee appreciating a little bit. So that takes away. But the cost environment is, with the noble metals being slightly up, but the base metals slightly being down. There are things which are up and down, but overall, the cost environment is looking steady. Entry-level bikes, certainly from a top-line perspective, they constitute about 48% of the Indian industry. That is reducing, that contribution is reducing, but at a very slow pace. We will go for market share in this area as long as it is a blue ocean. Currently, it is red ocean, and we find that if we have to optimize growth, competitive position, and profitability, we find that that optimization is not possible in the bottom half.
Okay, that's the word coming in from the managements of Mahindra Auto as well as Bajaj Auto. But time now to get in some BTST ideas from our technical experts. Aditya, you go first. What are you lacking at the moment?
So a couple of buy ones, Sneh. The first one is from the housing finance company, PNB Housing Finance. I think the entire space is looking very interesting to me. So PNB Housing Finance is a buy for a target of 1150 on the upside. At the stop is 1040 on the downside. The second is Titagarh Wagon. Again, after you've seen a lot of buying interest in the defense names, I think railways are also looking very interesting now. So Titagarh Wagon is a buy for me for a target of 980 on the upside, with the stop loss at 880 on the downside.
Picks coming in. Titagarh still making it to Aditya's radar despite the run-up that railway stocks have seen recently. So bullish call coming in on PNB Housing as well as Titagarh Rail. But Jatin, what about you? What are your BTST ideas for the day?
Yeah, so we also have a couple of long ideas. I think PNB has overlap, so I'll give another one. The another one which we have is Angel One. So capital market space is doing well. In that Angel One has broken out from a classical bullish flag pattern on the upside. So that is a long idea from our end. The stop loss should be placed at 3090, and we are expecting levels of 3325 on the upside. Another recommendation that we can go as a long trade is Ultratech Cement. So on the daily chart, it is forming a hammer pattern on the daily charts. This pattern usually occurs at the end of a short-term downtrend. So this bullish hammer pattern should be considered as a trend reversal pattern. So Ultratech Cement is a long idea. 11,100 should be kept as a stop loss, and we are expecting 11,500 on the upside.
Right, okay. In the meantime, some important news, and it seems that there is some trouble brewing for quick commerce major Zepto, as Maharashtra's FDA, or Food Inspection Authority, has cancelled its license for its Dharvi facility as part of a larger crackdown on the back of violations of food standards. In fact, my colleague Anjali Palod caught up with the FDA commissioner to know more about the steps being taken by the FDA against Zepto now.
The next step is up to the company. They have been served with the improvement notice. There we have mentioned what are the discrepancies, so they can fulfill the requirement as given in the improvement notice, and they can file an appeal that they have complied all the discrepancies, so that we can think it about revoking the license.
Right. And also in terms of expanding this inspection to other warehouses or warehouses of other companies, is there something in the works at FDA?
Yes, we are also thinking of getting inspected all such warehouses and the major ABOs, not only in Mumbai but in MMR and whole of the Maharashtra.
Right now it's a suspension of their license, but if it is found that it is happening in multiple warehouses, will the license be terminated at any point?
So that will depend how proactively they fulfill the improvement notice. If they are really very serious and able to fulfill all the parameters of FSSAI, then there will not be termination, but we can revoke. But if they don't come forward and don't proactively comply all the formalities, then maybe some different decision can be taken.
Okay, well, that's the latest update coming in on the entire Zepto case that the FDA, Maharashtra FDA, has flagged off due to unhygienic conditions found in one of their dark stores in Dharavi. But Nishchal, I want to get your view on this entire development that's happened with Zepto. How far behind does this set Zepto? Because if you see the competition in the quick commerce space, it's anyway very cutthroat between Zomato and Swiggy, and now you have Zepto that was threatening to take away market share from both of these listed players, but now you have a regulatory concern in place. So what is the sense that you're making of these? Because Eternal today is doing very well. Do you believe that this could have some long-term positive impact on both of these listed stocks?
I think this is a fallout of basically the intense competition, and Zepto, being the youngest player, basically wanted to do a catch-up. And I think in this catch-up, basically, I think some amount of corner cutting has happened. This is what we are seeing basically, but it's a temporary setback. I don't see any long-term impact of that. They will definitely rectify these problems and go back and get for a re-inspection and possibly sort this out. But I think this is clearly a red mark basically for them, that they need to get their systems and procedures right. What we have seen for Ola, that was a problem basically. This is the kind of thing when you are growing much more aggressively, then your systems and procedures can handle that. This kind of issues start happening. So I think these guys need to sit back and understand to strengthen their procedures and then come back to it. But I think all these companies are in a hurry to get to the market, and these are the shortcomings, or these are the shortcuts which they are taking.
Right, okay, that's the take coming in on some of these, QCOM platforms and the fallout of intense competition there. But within the listed universe, Nishchal, what looks like a better bet, Swiggy, or would you say stay put with Zomato or now Eternal?
I think Eternal has to me, and I want to make a disclosure. I'm a investor there, so I might be biased. But Eternal has been a winner hands down in both the places basically, whether it was food, whether it was delivery, or whether it is e-commerce, the quick commerce part. So they have been ahead of every one of them. Basically, I think last at least in the 4 or 5 quarters when Swiggy has got listed and Zepto has been around now, I think they have continued to manage their sales as well as the profitability. So I think they have been done pretty well basically in compared to the other two. So the market share continues to remain pretty robust. Rather, they have actually gained market share in the last 2 or 3 quarters. So obviously my money is on Zomato.
Okay, so betting on Zomato between when it comes to the listed quick commerce space. But Aditya, before we let you go, want to get a quick sense from you on the consumption ancillary plays, something the likes of Nykaa or these other platform companies that we are talking about. Give me a chart check on Nykaa. What do you think? Where do you think the stock is headed? Because given we've seen an inline set of numbers, segmentally the numbers have not been all that great as much as the street was estimating. What's the road ahead for a company like Nykaa?
I think it's still some time, Sneha, before these stocks actually look interesting. Though we did see a bit of an sharp up move in the stock from 160 odd levels to 210, 212. But again, now it's fizzling out and then it's coming back to 180 on the downside. So with all these companies, be it Nykaa, Honasa, Swiggy, you have to be a little braveheart if you're looking to put money in these companies because they're still getting into profitability and just going by the pure chart setup as well. Though there is good volume backed action which you see in these companies, but again, you'll have to stay put for some time, at least for a year or so. And these companies do offer an excellent risk to reward. I don't deny that. So Nykaa with a good support around 180, one can actually venture out if you have that kind of a courage and the money to deploy in these companies for a target of 240, 260 on the upside. Same holds true for Honasa. I think 380 on the upside is something that can be seen, and Swiggy too, which we were just talking about right now. That I think it's a dark horse in this quick commerce space and can actually surprise on the upside. But, closer to about 420, 450 is what I think Swiggy can test in the near to longer term.
Right, okay, that's the take coming in on what's looking interesting on the charts. Today, of course, it's really CDSL, Yes Bank, CAMS. They are the most buoyant names right now, holding out very smartly. In fact, look at CDSL. It's already clocked a double-digit gain right now. Prestige has bumped up a good 5% as well. Aditya, where within the entire realty pack are you seeing opportunity? Because what started with an uptick in Lodha now finally has taken shape, and you've got Prestige, which is already sort of catching up on the gains.
I think I'll still bet my money on DLF, which remains the top bet for us within the real estate space. And I think I would like to go with the leader in the market. And I think if you're putting your money on DLF, chances of you going wrong are very rare. So for a target of 920 to about 950 on the upside, I will be a buyer on DLF. The second in line for me will be Oberoi Realty and Godrej Properties. I think both of them offer an excellent risk to reward at current levels. For a Godrej Properties, I think 2,800 is possible. For an Oberoi Realty, I think 1950 to about 2,000 is something which is very much possible. Then maybe I will look at something like a Lodha because that also looks interesting to me. So in the pecking order, maybe I'll look at first DLF, followed by Oberoi Realty, Godrej Properties, and then Lodha. Prestige, I will for the time being give it a pass, see how the stock behaves over next few trading sessions, and then maybe look at it.
So that's Aditya's pecking order when it comes to the realty space. You have DLF, Oberoi Realty, Lodha, all of these stocks looking good. Jatin, before we start winding down for the day, give us a sense of what tomorrow's trading session could look like. What can we expect? Can we expect to positively break above that 24,700 level and be there for good? And what are the levels that you're spotting for tomorrow?
Yeah, see, I believe that the recovery from intraday lows has been pretty good, and we are trading around that 20-day moving average, which is around 24,700 odd level. So tomorrow we might just continue with the intraday pullback that we have started today. On the upside, in terms of levels, we believe that 24,850, 24,900 can be expected in a couple of days from today. On the downside, 24,600, 24,550 remains a very strong support for the Nifty. So overall, yes, we believe that tomorrow could be a day of positive momentum being continued.
Okay, interesting. Nishal, as we move forward, what could be the big triggers that the market could work with, given that the earnings season is behind us? But yes, you've got the MPC outcome later this week. Do you think a rate cut is well in the works?
Yeah, I think so. Definitely, a rate cut is there, but I think the bigger thing still remains to be 90 days are coming for the Trump tariffs. So that is a big trigger. Basically, I think the whole market is awaiting. I think the dullness in the market, which you see, I think that is more of a issue because of what is going to happen post the 90 days, and where the tariffs are going to get settled. So I think that is the most important part. But obviously, I think there are a couple of other things. One is how good the monsoon and how well spread the monsoon will be, because I think consumption side, it's going to be a big trigger. So I think these are 2 or 3 immediate triggers which are going to be there in the market. But I would actually look out only for the tariff front. And the other one, which is becoming a bit of a worry, is the Ukraine-Russia war. If something goes beyond the conventional and goes into the nuclear realm, that could be a very big one basically for the world. So we need to just watch out for that geopolitical situation also.
All right, so Nishal, Jatin and Aditya, thanks so much for taking the time out and joining us on the show today. But as we wrap it up, let me hand it over to my colleague Ashesha, who's joining us with a sum up of what today's trading session has looked like. Ashesha.